Hey guys, today is Friday, December the 2nd of 2022, and I just wanted to go over gold really quick, a quick update. Just wanted to show you some seasonality things I'm seeing. This blue line, this is the 5-year average, and the way price action is going right now, it looks like it wants to follow this projection, 5-year average. Looking good so far. Hopefully, it's not like the 15 or the 10-year. The 10-year is not that bad. It's just kind of going sideways. But so far, it's looking pretty good. We know that December and January, within the 5, 10, 15, and 20 seasonality averages, December and January are pretty strong compared to the other months. So I'm looking for a higher price action. I just wanted to show you this video clip here. We're gonna go to the next clip and see some other cycles and some other levels I'm incorporating into my trading view. Okay, so this is my trading view chart, and there's a couple of things I want to show you here. There's a date I have for the 5th. That will be Monday, just to keep on watch for maybe a little pullback. This is a lot of things I'm looking at here. Let's start off with the weekly cycles. I'm kind of putting all my stuff here, like I have a one-stop shop. We'll start off with the bigger cycle. The bigger cycle about to be hitting a trough around in December, so it's not fully down yet. But it looks like gold has already gotten a head start, and then the cycles are up. And then there's a dominant cycle. The weekly cycle is a 241. The dominant cycle is the 245. And you see that we just hit a trough. So this cycle is up. So the weekly is looking good in regards to these cycles. So that's good. That's positive. Even though it got a head start, that's fine. So let's, and that's both of them right there. So this is a good thing in regards to cycles on the weekly. There's always to go with the weeklies behind you. Now, looking at the daily is going to be a little interesting. Open this up here. There's a couple of cycles here that I'm looking at. Let's open this up. We'll start with the bigger one, the 379. This one just hit a trough around November 14, and this cycle is up. This is the bigger cycle. The 222 hit a trough around September, and this cycle is up to like January the 17th. Let's open this up here. Let's go to the daily, because this is the daily cycles. I gotta close this up a little more. Sorry, I'm on my laptop. I am on the go traveling. So let's start this over. Smaller monitor. So it's a little harder to navigate. So yeah, so this is the daily cycle, the 379. So that cycle is pointing up. So that's positive. The 222 cycle, we're going to be hitting a peak somewhere around January the 20th, around there. And we know that January is pretty strong. And then the 191. So these are the three cycles that are, that are pretty strong, very important. And this one hits a peak around December the 23rd. And the last one is the dominant cycle. It's a little more fractal and smaller. So this one, you may think to yourself, like, so what is a dominant cycle? So it's smaller and it's fractal. It's one of those little things that it's like a wave within a wave, and it's the dominant one. So the way I would use a dominant cycle is, it was like, okay, we're getting a little toppy over here. Maybe they could be a little pullback, and maybe it could continue, then continue going up. It's just one of those things that, the price action could follow it, or it may not, like it may follow it halfway and then continue putting another leg higher. It's one of those things I just look at. So there could be a possibility that it could get a little, you know, when I mean a little toppy here, that it could have like a little mini pullback or a little sideways correction and then resume the trend higher. So I have the six here using another technique, and also looking at average return by trading during December. It looks like the first, second, and third are very bullish, and then the fourth, fifth are the weakest. And the fourth, I believe, is a Sunday. So then the fifth is a Monday. So that statistically is normally negative, and then the sixth could go either way. But I have it here as a marker, so it could either find a swing low and then go up, or maybe top out here a little bit and then maybe have a pullback. And then the 7 and 8 are pretty strong, and then from the 9th to the 11th, that's when it gets a little weaker. So this is just statistically on December. The average return. And average return by weekday. The first week is kind of flat. The second week of December is normally pretty strong, so that's a good sign. The second and third week of December are pretty strong. And I think that's it. So I just wanted to show you, putting them all here in the open, you kind of get the picture that, the cycles are up on the daily and on the weekly, and the dominant cycle could get a little pullback, and then it can resume the trend higher. So we're going to be looking for, possible, turning points into December, further way, into December and January, knowing that this is the season where it's the strongest. So I have them all here marked out, so I can kind of see price action. And once we get closer to these things, then I'm going to be really looking at like a hawk and seeing, if it's turning or going to continue pushing higher, if it's going to follow these cycles. Let's hide that and put that away. I did the weeklies. Then measured move. This is a technique I like to use. We should go to the weekly because we could kind of get a better gauge. So supposedly, the cycles are not going to play out. And the gold is going to do like its own new thing or whatever. In regards to measured moves, from these down moves, you see that there's one, and it took 34 weeks for this move to end and go up, and this move to end was 34 weeks. So we go 34 weeks into the future as a measured move. That leads us to June the 26th of 2023. You could also do, because this was just on the downward. So you could sorry, I'm doing this in real time. Clone and see how long it took us from here to here. That was 49. So you could go 49 bars into the future. And this is just a projection, not saying that this is exactly, but it's just to kind of get an idea of what, could probably play out using measured moves. 49, that's it right there. So that'll be to October. 48, 49, yeah. Put it a little higher so we can see. 49 weekly bars. Not that the prices are going to go up there, but regards to timing. So I'm going to go start off with just a 34 and just see if that's going to be a turning point over there. What else? I think that's it for this chart. Let's measured moves. Let's hide these right here. And then lastly, go to the daily chart. and at our Fibonacci. Actually, we could take these things. We'll know that we already out of the demand zone, and we're going into the we're going up. So keep an eye out in regards to level. Keep an eye out for the 1834. That's the center of gravity point within this range right here. I'm not going to show you Elliott waves and all that stuff. I don't have that prepared on this presentation, but keep an eye on 1834. That's the 50%. I know there's a jobs report number coming out today, so it'll be interesting to see if this thing spikes up and hits that up there. The next target would be the 61.8, which would be the 1889 right here. I don't want to make this video too short, but I just wanted to show you some of the things I'm trying to put all together on TradingView. Instead of like opening all these programs, I want to incorporate the Elliott wave in here, the cycles, which I already have done, the weekly and the daily. I won't be able to do seasonality stuff, so that's something that I would have to show separate, and either maybe composites and stuff like that. And then all the other Gantt stuff, I'll be using like the master chart and showing other stuff there. Well, hopefully you have a great weekend. This is my last video for this week, and I'll keep you posted on gold using cycle and double Gantt technique.